Good morning, Retail Alliance members. This is Ray Mattis, President and CEO of Retail Alliance. This is our third Friday coronavirus briefing. Obviously, and not really unexpectedly, things have rapidly progressed. However, not all positive as our country during this time trying to wrap our arms around this pandemic. With that in mind, today we have Kate Baker. We're going to be hearing from Kate Baker, a lobbyist with the Virginia Retail Federation, who's going to provide us an update at the federal as well as the state levels. In addition, Kylie Seibert, our VP of Communications, as she has during the past coronavirus briefings, will be providing any type of updates on upcoming webinar events. And this week, we're also joined by two financial experts, Misty Lineberger of Pexel Financial Group and Tara Jones of Fulton Bank. They're going to share their knowledge and advice regarding the financial business relief for small businesses, meaning the Small Business Administration, the Economic Injury Disaster Loan, and the Paycheck Protection Program Act. That's something that Retail Alliance is actually applying for as we speak. So your questions can be submitted via Zoom throughout the briefing, but to minimize confusion in time, we will address them all in the Q&A session at the end of each section. So let's jump right on in, and I'm going to hand it over to our own Kate Baker.
Hey everybody, good morning. Hope you're all doing well. My section will be very short today. On the federal level, there has not been much change since last webinar. You've got experts on here to talk about the two different loan programs. So I'm going to let them cover that. Also on the federal level, you can most likely expect to see additional aid packages. There's already talk about the COVID-19 number 4 stimulus package. Congress is in recess right now, but when they get back in, I'm sure that we will be seeing that begin work on that, so we can wait for that one. And then on the state level, Governor Northam issued the stay-at-home order, and as has been said in the emails that VRF has sent out as well as Retail Alliance, that stay-at-home order, Executive Order 55, does not change what businesses can operate and can and cannot operate under Executive Order 53. So if you were operating under Executive Order 53 and following those guidelines, you're still operating under Executive Order 55. And then also on the state level, I know this is not top priority for everybody, but it will be once we get through this crisis. You know, right before all of this started, we had just wrapped up the 2020 legislative session. We're still in the process of the veto time period for the governor. VRF, along with other business organizations, has reached out to the governor about postponing some burdensome legislation on businesses. We've sent a letter, we've gotten some press coverage on it. We've gotten some good feedback from the administration, so we're hopeful that some of this burdensome legislation that passed during the 2020 session will be postponed for hopefully a year. That's just one more thing on top of everything else that business is going through that they don't need to deal with. So that is what we're doing on the state level. And then, as always, keep an eye out for action alerts and the informative emails that we send out so that you can stay up to date on all the information that's coming out daily. Anybody have any questions?
Thank you, Kate. Joey, do we have any questions for Kate coming in online?
Not at this time, Ray.
So now we're going to turn it over to Kylie. We'll turn it over to you.
Unmute. Let me unmute myself. Okay, so we have been, as you can probably tell just through the amount of communications that we've been sending, had included quite a few extra webinars just to be able to help our members and the small business industry just to try and get through this crisis. So we're calling them the Strive Retail Relief and webinars. And this week we actually, we had two. One was Lisa Smith, Mind Hack Coach, which is about resiliency, decision-making in uncertain times. And the other one was Bernd Huss from Alternative Board. He presented on emergency business planning. Just wanted to point those two out because they are now up on our YouTube channel, which you'll see on the screen is the address. So you can have a look at those recorded sessions or any one of our other previous briefings, and our strives are also up there as well. You can also see up on our screen upcoming webinars that are happening in the next couple of weeks. Next Tuesday, April 7, Sonia Schweitzer is doing from the Intentional Marketer is doing a webinar about email marketing, which I think is extremely important as one way to reach customers right now, to still try and just, keep that interaction with them. So that's at 8:30 next Tuesday, April 7. On Thursday, we've invited our attorneys, Wilcox and Savage, their employment department, that are actually going to be presenting about anything to do with the employment issues related to COVID-19. So I think that that'll be great. If people want to join, they can ask their questions as well, or they can certainly submit their questions prior to that event to communications@retailalliance.com. So that's at 9:30 next Thursday. The following week, Cheryl Tan, we have moved up her Strive webinar that was originally scheduled for May. We've actually moved to April 14 because we think the video is another way just for that customer interaction to really just keep that connection going. So, and I know Cheryl has done a couple of webinars recently, which have been fantastic. So we really wanted to bring her in again, just for anyone who hasn't been able to connect with one of her webinars on April 14 at 9:30. So they're the three as they're coming up. They will be put on our website, also publicized on Facebook and our member group. So please register for those. And that is pretty much all for me. I know that one thing that we have mentioned each week, just to let you know, to our Retailer of the Year function that was scheduled for May has now been pushed back to September. So we will send some more communications out about that as well. But as you know, except for webinars, we've had to put on hold or rain check a lot of our meet and greets and other events. So I think that is it for now. I'm going to hand over actually to Misty Lineberger and Tara, but I think Misty's got some things she wants to share, and Tara's on the line too to be able to answer any questions. So please submit your questions through the chat. Misty is actually going to, she has been doing some videos lately, which I caught a hold of one and thought it was amazing and very clear and precise. So thought we'd ask her to join us on this call. Very timely actually with, I think the applications are opening up today and she'll probably talk more about that. But also Tara Jones from our member Fulton Bank is also, I think, been dealing quite heavily with a lot of her customers with this as well. And she's got a great deal of the knowledge about the application process too. So having them both on the line with us is, thank you very much for joining us today. So I'm going to hand over now to Misty.
Hi, everybody. It's good to be here. Thank you so much for inviting me. So I'm guessing a lot of you probably haven't seen my videos, so I'm going to probably repeat a lot of information you've already heard, but I think it's a good refresher. So as you all know, there are two different loans that you can get with the small business relief. You've got the PPPs, which are the payroll protection programs. I call them PPPs, it's just a mouthful. And then you've got the EIDLs, the economic injury disaster loans. Now, the PPPs, really, their primary purpose is to keep employers to a point where they can cover payroll at its normal levels and maintain its normal employee retention levels. So they're actually getting very restrictive about what you can spend that money on. Now, you can spend it on some non-payroll related expenses like rent, utilities, mortgage interest. However, they want 75% of your loan to be used for payroll, at least 75%. And they don't want any more than 25% for non-payroll related items. So I've actually been kind of working with people to just use the PPP for payroll. I'm saying, hey, let's open up a separate bank account just for the PPP, because every dollar you spend out of that, you are going to have to justify in some way. And as Kylie mentioned, the application hasn't been available until today. Now, a day or two ago, they released a sample for you guys to go look at if you wanted to, so you knew what kind of information was going to be needed from you. But they want to know who is on your payroll now. They want to know how much you're paying them now. So you need some information from now, because then later, when you apply for forgiveness, which you will do through your lenders, as I understand it, they're going to request all of this information, and you're going to have to justify everything. So documentation has always been important, but in terms of this PPP, it's going to be additionally important that you save everything. The other thing is we originally thought that this was going to be paid off in 10 years with about no more than 4% interest. But 2 nights ago, they came out and said, nope, it's going to be 2 years and 0.5% interest. So they've significantly dropped the amount of interest that we're going to get charged on these, but they've also shortened the amount of time we are going to have to pay them off. And this is just my opinion. It's nothing official, but I think they're doing that in order to make sure that we are using these for the forgivable expenses, primarily payroll. So lots of different things going on there. That application is open today. So just know you need to get onto the SBA site and you can start working on that. Now, in terms of the EIDL loan, I think the 2 most important things you need to know about these loans right now is, 1, you have to be in a state that has been declared a disaster zone. So Virginia clearly has been declared a disaster zone. But the second thing is you need to apply for the COVID-19 disaster loan. So an EIDL, the economic injury disaster loans, these are actually loans that they have out there so that people can apply for them if they're affected by a tornado, a hurricane, an earthquake, some major natural disaster. So a couple of times people have applied for the wrong one. So just remember, when you go to apply, it is the COVID-19 in EIDL that you're trying to get your hands on. Cox Communications is a question up here as an internet supplier. The answer is, I'm going to say yes. I don't have direct guidance on this, but a lot of us are working remotely, and our businesses are relying heavily on internet right now. We're going to have to be super reasonable about that. Also, in terms of non-payroll related expenses, some people are asking me, hey, well, my house has a mortgage and I have to work out of my house. Does that qualify? No, it has to be business mortgages. It has to be business rent. So just so you know that on the back end, we might be able to do something about the expenses that you're using out of your home. For example, I'm using my personal internet. But for now, if you are paying for Cox Communications or Verizon Fios or anything in your place of business and you're still working there, in my opinion, those qualify as needed and essential utilities. Can we use the 25% for the April employee taxes? The answer is probably. I'm going to have to find out on that. As you're probably going to hear a lot of I don't knows, and I'm looking into that because the new information is constantly coming out on an almost hourly basis. The PPPs, one of the things that you need to know about those is they only cover from February 15th of 2019 through June 30th of 2020 through June 30th of 2020. So it's a fairly narrow time frame, but the payroll expenses, it's payroll and payroll related expenses. So that would include taxes. So if you have payroll taxes in April, then yes, that's a payroll related expense. Furthermore, what they want you in terms of how much these loans are going to be for the PPPs, they want you to look back at last year because they're trying to compare season to season, apples to apples. So you need to go back and you need to look at February 15th of 2019 through June 30th of 2019, and then divide, and get your total payroll, divide by 4.5, and then add 2.5 times that. So 250% plus an additional 25%. So I'm going to repeat that because it sounded a little confusing to me just saying it. So from February 15th, 2019 through June 30th, 2019, you're going to come up with what your average payroll at that period of time was. Then you're going to add 250%, so times 2.5, and then you're going to add another 25% onto that, and that should be your payroll loan. Now, a lot of people are asking, wait, we have seasonal, we don't usually have employees in February, we don't start until March, and the government does recognize that, and they're saying, okay, well then use March 1st as your time frame. We certainly don't want to water down your numbers by adding periods of time where you clearly don't have payroll. Some people are like, well, I wasn't in business then, I'm in business now I have payroll. Well, the government is saying you're going to use January 1st of 2020 through February 29th of 2020 to get the average payroll and basically do the same math. And then other people were like, I'm in business, I was operational during that period of time, but I didn't actually have payroll until much later on in the year. And we still don't have official guidance on that. So what I'm telling everybody until they tell us otherwise is we're going to use the January 1st, 2020 through February 29th, 2020 to come up with those numbers. Now, 1099 consultants are included in this. That might not be the best option. One of the things that I'm really cautioning people on are the PPPs might not be the best option for you, or the EIDLs. Because 1099 consultants can go out and get self-employed or unemployment now, which for the first time ever, self-employed individuals are going to be able to do this. That has to be an option that we look at, and maybe the EIDL is a better choice for you. So just something to keep in mind. Now, somebody's asking about the COVID-19 SBA loan. That would be the EIDL. Well, the PPP is also a COVID-19 loan, but that's fully backed by the federal government. Now, the EIDL, on the other hand, like I said, emergency injury disaster loan, that is an SBA loan, and it's for COVID-19. Specifically, they have two. Remember, you want to apply for COVID-19. And its time frame is a lot wider and it's a lot less restrictive. However, there isn't anything about the EIDL that is going to be forgivable. So it covers January 30th of 2020 through December 31st of 2020. So significantly wider time frame here. And you have to have been in business by January 30th of this year. It's up to $2 million at 3.75% for small businesses and 2.75% for qualifying nonprofits. Now, those applications are open and available. Some people applied for them last week and have applied for them this week. They have 21 days, to my understanding, to process those things. But if you're applying for them now, it might actually take a little bit longer because they technically have 15 days to get the program up and running. And Tara may be able to answer more questions about that on the banking side of things. So we're only into day 8 or 9 since the bill was passed. So they're still trying to get things together. Now, these can be used for pretty much anything that you need in order to run your business, whether it's payroll, whether it's operational expenses that you have, regardless of what's happening now. It's supposed to help boost up the income that you've lost. Now, how much those loans are going to be are still kind of a mystery right now. There are some rumors, some industry talk that potentially what they're looking at doing is giving you 50% of your gross income for the year, or your gross profit. Let me repeat that, your gross profit for the year. So two of the questions they ask you on the EIDL application is, one, what is your gross income for the 12 months leading up to this? So you're going to be looking at February 1st of 2019 through January 31st of 2020. And then the second question is what is your cost of goods sold? Because gross profit is gross income less cost of goods sold equals gross profit. So the fact that they're asking those questions makes me wonder if maybe those whispers don't have some relevance and backup there. But we still really don't know what that is. So, and cost of goods sold, just so you know, I know a lot of people are very confused about that. Cost of goods sold are essentially expenses that you wouldn't incur unless you were actually doing business. So things that don't really qualify are your rent, your mortgage obligations, debt obligations, some payroll, but cost of goods sold are, like, for example, we have QuickBooks fees. Our QuickBooks fees increase every time we bring on a new client. So that's a cost of goods sold for us. Now, the maximum amount for the EIDLs is going to be $2 million. And the maximum amount for PPPs is going to be $10 million. But what's happening is they aren't actually asking you how much of a loan you're going to get, because this is a question here about the maximum amount that you can apply for. You're simply going to give them your numbers, and they're going to come back with you with a number like, here's how much we're willing to loan you. So for the PPPs, that number is going to be the lesser of 2. It's going to be the lesser of 2.5 times your average payroll plus 25%, or $10 million. Now, I know everybody that I work with, that $10 million is way more than they would ever need. They're not even going to come close to qualifying that. So I think most people that I work with and probably I'm talking to are looking at the 2.5 times the payroll plus 25%. And in terms of the corporate tax return, I haven't seen them ask for the tax returns yet. They may be asking for those. I'm still going through the application. There have been a couple of people who have asked me to update them on that, but I'm not quite sure about the tax return question. They're simply just taking your numbers. They're asking you what your gross income was. Now, they'll probably be able to compare it to that, and they may ask you to justify it. You should be prepared to do so. So that's actually a good question. Now, there are plenty of questions about businesses that have already shut down. I see Brenda's just posted a question. I received a question earlier this morning as well. They've already closed down. Their employees are already on unemployment, and they want to know what loan they should be asking for. And once you don't have employees and they've already gone on unemployment, the PPP is no longer an option because you do not have payroll to maintain. And remember, the PPP is specifically to cover payroll during the COVID-19 crisis. However, I imagine you're going to have some operating expenses that you still need to cover. And rent, leases, and other just general expenses in order to maintain through the crisis. So you're looking at doing the EIDL, which is the COVID-19 EIDL. So, and again, we just don't know how much that's going to be. Now, the terms on that EIDL are going to be up to 30 years and 3.75. But the most important thing people are asking about right now, I'm going to let Tara kind of ask about that part. No, I wouldn't bring her on full time right now, Brenda, simply because right now everything's kind of in a good place, and I would hold off on that because, again, it's about retention, and you're going to have to prove before, during, and after. So I think just leave things as they are right now. Now, everybody's talking about this grant. So when you apply for the EIDL, which has to happen to apply for the grant, there's this little checkbox that you're supposed to check that says, please consider me for the $10,000 grant. And I have a lot of people who think they're just going to be handed $10,000, and that's not necessarily the case. It's up to $10,000, and I have no idea how they're determining how much you're going to get of that grant. Now, the thing about this grant is that it does not have to be paid back. You can be denied for the EIDL, and you can decide after you've been approved not to take the loan, and you still get to keep that $10,000. And if the only thing you do is the EIDL with the $10,000, you never have to pay that $10,000 back. However, if you decide to get an EIDL plus a PPP loan, because you can apply for both, whatever is going to be forgiven on that PPP loan will be reduced by the amount of the grant that you received. So you're not allowed to have $10,000 in grant and then $10,000 in forgiveness. The other thing is that if you're denied for the EIDL and then you get the grant and then you reapply for the EIDL, whatever you are approved for will be reduced by $10,000. And so there's a lot of conjecture right now. And honestly, I have not been able to find a clear answer. If anybody has seen one, please let me know. Whether the grant is in addition to the loan or an advance on the actual loan, because the grant is supposed to be able to get to you in 3 days, whereas it's supposed to take up to 21 days to process the EIDL, which again, I'm sure Tara can talk about a little bit more. So some confusion there, but just some caveats that you need to be keeping in mind. I feel that the EIDL loan is more flexible because you can also refinance it as a PPP, which might be the right thing if you are able to forgive more than $10,000, whereas the EIDL is not forgivable. So these are just things that you really need to know, that there are a lot of different caveats to everything. You need to be sitting down with your advisors and trying to figure out what the best course of action is for your business. Another thing is there are a bunch of payroll tax credits coming out. So one of the tax credits is if you are paying for COVID-19 paid leave, meaning the employee has been diagnosed or their children can't go to daycare or they're caring for a loved one. There are actually 6 different things that go into this. Then that will also not be forgivable in the PPP because you're going to get a basic dollar for dollar reimbursement from the government in the form of a tax credit. There is also a tax credit for employers that can be up to $10,000, I believe. It's $10,000 of payroll. Up to the first 50% of the first $10,000 of your payroll is going to be forgiven. And if you qualify for that, you cannot take that and the PPP. So that one of the things that you're going to need to do is decide which one is to your most benefit. Now, help for 1099 independent contractors, they can also apply for the EIDL, but they need to consider the possibility that the unemployment might be to their best benefit. If they, for example, I know a lot of independent contractors, they're not paying for rent for facilities. They don't have a lot of overhead. They might have some membership dues they have to pay. Maybe getting the EIDL and putting themselves in a debt position isn't the best idea, but they might be able to go ahead and apply for unemployment. So that's got to be one of their options. In my opinion, with the 1099 independent contractors, unless they have payroll, it's either the EIDL or the unemployment. But of course, this is a case-by-case basis and each client is unique. So we're going to have to keep up on that. So Kristen, to clarify, you can apply for EIDL and grant, turn down the loan and keep the grant. Yes, as a matter of fact, yesterday I was in a class and I asked that very same exact question and the answer was yes. You don't have to take the loan. The other thing is, everybody, I am of the camp that if you don't have to take this money, don't. If you are financially okay and you can make it through, don't take this money, because the point of these relief programs is to help businesses who are really in trouble of completely disappearing, stay afloat during this period of time. And I think we all need to be working as a team to make sure that the money is going to the appropriate places. I have had a host of people contact me who just want to apply for it and take it because they can, not because they need it. And I think that's the wrong attitude. So I really want us all to keep the eye on the ball there and know that if you don't need it, don't take it. I mean, leave it to the people who are truly in trouble. The other thing is somebody had asked about timing. Like at the time, during the time period in 2019, they had more employees than they have now, and they don't want to take more money. So how is that going to happen? Well, I don't know, but I can tell you that you don't have to take, in general, you don't have to take more of a loan than you need. You can certainly pay it back. There's going to be a lot of communication happening before the actual loan is approved. And I'm guessing, Tara, please, if you would address that, that would be great. But I appreciate that thought. And the answer is, I just don't have clear guidance on that. And I think that's something that Tara needs to answer. And I agree with the unemployment too, Brenda. Absolutely. I did have somebody contact me and say, hey, I'm fine financially. I've lost 20 hours a week. Should I be paying, should I be applying for this unemployment? Am I leaving it on the table? And the answer is, if you just told me you're financially fine and that you're not worried about your finances, then don't apply for the unemployment. So Brenda, absolutely, 100% agree with you. All right, I think I've covered, what if only one of 12 employees filed with the VEC? Can she stop and then apply for the PPP? Pamela, I do not know. I'm going to be working with one of my payroll experts. I've been relying heavily on them. I'm going to have to get that question answered for you. I don't know the answer to that question yet. All right, I think that's all I have. Is there anything else that I didn't cover that somebody wants me to mention?
Were you able to answer Brenda Tusing's?
Okay, so we talked about the process. Okay, so will you be able to repay yourself for rent, payroll, paid prior to receiving the funds? The answer is yes. Okay, so remember that the funds are retroactive to February 15th of 2020. So yes, if you have paid out of your pocket for these things, you will be able to pay yourself back using these funds. Now, so there's so much going on. Like, okay, so some of our employees, it's not that they can't work, it's that they are choosing not to work. So what do we do then? I don't know. I really want the answer to that as well. I'm going to be working with my payroll company today to go ahead and try and get some of those answers. There are just a lot of things that when Congress passed this bill, there are huge holes that we're trying to fill in and get official guidance on. And in some cases, we're just kind of going with it and coming up with the most logical way of looking at it. I'm not sure if it works for you or against you. I have one client who said, I have an employee who just disappeared off the face of the earth, won't talk to me, won't email me, won't communicate in any way. And how is that going to be a problem with the PPP? I think the government's going to have to make, this is just my opinion, but I think the government's going to have to make some concessions here in that employees are going to lose their job simply because they have chosen to fall off the face of the planet and not communicate with their employers. But I don't know what that's going to look at yet. I know it's going to have a lot to do with documentation. I've already started that particular conversation with my payroll company who is, digging in deep to this. So just, those are still answers yet to come. Now the exact dates, I'm not sure this question, Brenda Tusing, if you would please clarify, what do you mean by the exact dates we need to provide information for? I think you might be referring to, they're asking for 12 months of gross income from the previous year. So you're looking at February 1st of 2019 through January 31st of 2020, because those are the dates that occurred prior to the crisis taking place. So that's one of the things that you need to be looking at. And I think I went over how the loan amount will be decided, but just really quick, still don't know. They haven't really given us a formula for the EIDL. Tara may have that, which would be great. And as for the PPP, it's going to be the lesser of 2.5 times your average payroll plus 25%, and then, or $10 million. And let's face it, most of us are looking at the former part of that. Now, Tracy is asking, I'm understanding now the PPP only allows 25% of the loan to be forgiven for rent. Yes, and the reason for that is because of the incredibly high demand they're anticipating for this, and the fact that it is initially intended to cover payroll costs for an employer so that they can maintain their employment and salary levels, that they really want to make sure that that money is being used for that. So in some cases, I am actually recommending for some clients that they take both the EIDL and the PPPs and just save the PPP for only payroll so that we can get it forgiven. And note that it's only 8 weeks of payroll that gets forgiven. So no matter what here, and it's 8 weeks of expenses, no matter what here, there may be a portion of that that is not forgivable. So just know that. And then use the EIDL for your everyday operating expenses, your rent, your mortgage, your debt obligations, your utilities. Right, so if your rent is higher than payroll, you're definitely going to want to use the EIDL. I'm sorry, you guys, as I'm looking through.
Did you get Pam's question last night that we sent through?
Yeah, hold on a second. I am looking at all of these right now. Right, so, okay, so Pam, I can't answer your specific question. My CPA license doesn't allow me to talk about specific questions for you. What I can tell you, and I addressed this a little bit earlier as in regards to your question, is I still don't know how that's going to work. I can tell you that if they give you a certain amount of a loan, they're going to come back and let's say that it's higher than what you really need. You do have the option to give some of that money back if that's what you need to do. So I really appreciate what you're saying there, and we're going to get more guidance as it goes. And Tara may actually be able to answer that question a little bit better. Let me see. I'm not sure, Brenda, if I understand your question on the PPP. If I paid myself, can I apply for myself loss of income or what? If you are on payroll, your payroll feeds into this PPP and covers your payroll as well. As it up to this will cover payroll up to $100,000 per employee. But if you're, if you're over $100,000, you don't get the over part. Just so you know. So yes, if you are on payroll of your company, your payroll does feed into this, and yes, you can pay yourself. And I'm hoping, Brenda, that was your question. Does that pretty much cover? I hope. Okay, she says it does cover it. Okay, great. All right, you guys. So clearly, I mean, like I said, I can't talk about anybody's specific situation in this venue, but if you do have additional questions, don't feel bad reaching out to me. Send me a quick email. If I answer the phone, you're going to have to go to the lottery and get a lottery ticket, because I'm just not able to answer the phone so much right now. But please, my email address, I'll type it into the chat. So feel free to go ahead and do that. I also have a newsletter that I'm using to get this information out as quickly as possible. So if you want to be part of that newsletter, certainly send me your information. I'll make sure that you're on it. And in the meantime, I'm just doing everything I can to stay on top of this as much as possible. So I really appreciate the opportunity to get this information out to you guys.
Thank you, Misty. I also wanted to open up to Tara from Fulton Bank. There was a few questions, Misty, that you alluded to that maybe Tara could answer.
Right.
Tara, are you online?
Yes, I'm on the line.
Okay, is there anything that you were able to sort of fill the gaps in or sort of explain a little bit more about?
So I do want to start out by saying that I have been following Misty on Facebook, and of course she did a wonderful job today with regards to answering the different questions and explaining both programs. And that is definitely one of the things that we've been encouraging our customers hugely, and that is to reach out to their CPA, to their accountants, because a lot of them have the best knowledge and the best grasp on what's going on and how to fill out the information properly to assure that they get the funds that they're looking for. They're the ones who can answer questions about the personal numbers that they actually have to write down. Like Misty mentioned before, documentation is going to be key. With the PP plan, we get a lot of questions about forgiveness and concerns about forgiveness. And she is right. You do not have to accept every loan that you apply for. And you really need to be mindful of how much money you are accepting, because in the end, you don't want to position yourself in a way that's going to make it hard for you to pay it back. Because I know the PPP has a 2-year repayment and the EDL has a 10-year repayment. So you're going to have to look at which one of those is going to be in your best interest. And also, too, being mindful of if you are going to try to qualify for the forgiveness piece of it, what level of documentation are you going to have to prove in the end so that you don't have the burden of having to repay that loan. Because stuff is so fluid and ever changing, we don't want to mislead anyone, with regards to the PP plan. I mean, for them to go from 10 years to 2 years is a huge jump. So I can only imagine someone asking for $100,000 and then it be attached to a 2-year repayment, but then having to worry later of how much of that's going to be forgiven based on the documentation that they did and the rules that the SBA will have set aside, with regarding that. So definitely keep connected to the SBA website. Like Misty said, the application has just changed. We too have put up a new application on our website on Fulton Bank. We've been keeping our website up to date as the information has changed. I have noticed a lot of the other banking institutions have not done that, but we've been encouraging customers and prospects. You are more than welcome to use our website because we have been putting the information up. The best advice I can give a lot of business customers is please reach out to your bank as soon as possible. As of April 3rd, which is today, it has been opened up for accepting of applications. But the thing is not all banking institutions are set up to accept applications as of today. That deadline was something that was given out by the SBA but because of the magnitude, the amount of applications, and the ever-changing dynamics of the plan, it has caused banks to have issues with trying to pull together staffing, pull together a workflow model that's going to ensure that they are able to take care of everyone in a timely fashion. And I noticed that there was a question out there about 7A banks. So yes, Fulton Bank is a preferred lender, but there are a lot of banks out there that are not preferred lenders. But one of the things that one of my colleagues told me, one of my SBA officers, is they have opened up the ability for all banks to be able to process this. But it is up to the bank if that's what they want to do and want to participate in. Unfortunately, there is some things going around out where there are banks that are declining. I don't have any list or any names of those banks that are making a decision not to participate due to the risk level, but that is something that the SBA is going to have to address, and I'm sure they're having to maybe change their lists out of banks that are going to be participating. I know that Fulton Bank has made the decision that we are at this time handling requests specifically for our existing customers only. Until we can get through that workflow and figure out what that looks like, that's what decision that we have made as an organization. We have opened up our lines as of April 3rd today. We have put on our website an email portal that will allow people to upload their application and supporting documentation. If you're wondering what that supporting documentation looks like, we do have it on our website if you're wondering what that looks like. Again, you know, I can't tell people enough that they're going to have to really call their bank that they have their business account at and check to see what their workflow looks like, what their time period is going to be, because technically banks necessarily did not have to be mindful of that deadline. We as an organization tried to be mindful of that deadline, but I will tell you that from the inside, it has been a struggle for us to pull together staffing that's going to be able to support the influx, excuse me. We already had at least over 2,000 individuals who said that they were interested in receiving additional information through a special email portal that we had when we were gathering email and information from different sources. So it is definitely going to be a challenging time, even for the financial institutions out there. But for those business owners that are trying to pull everything together, definitely make sure you have filled out the application and true initials, true signature on the SBA form, because it is an SBA form, and upload all supporting documents, put everything into an electronic format, because that's how it's going to have to be received. So it allows you to be prepared and ready for when your bank opens up that ability to be able to apply.
That's great, Tara. Now, Ray did mention a question too about wanting to touch on the cap, why it is important to apply as soon as possible.
It's very important because the amount of money that was said out loud of what they're going to be given in order to assist business owners sounds like a lot of money, but it really is not. In the past, we have seen it happen, and that is where the money runs out. So it's going to be very important for people to make decisions about if this is going to be in their best interest to apply for the different various programs, and is it beneficial for their business, for them to go ahead and put their hat in the ring, for, so to speak, so that they can be able to have approvals in front of them to allow them to make the best possible decision for their business. And like Misty said, if your business is doing well, I have quite a few business owners who are was doing very well before this began, who are still able to maintain. I have a few that are still busy and I have been blessed with the opportunity to continue business. But those individuals have made the decision to just maybe possibly apply for, you know, a working line of credit to set to the side for just in case they may need funds. So definitely reach out to your bank to see if they have different programs outside of this that might be able to assist. So for example, like Fulton Bank, what we did was for those business owners who are not in need of funds, we are offering them a opportunity to apply for a business unsecured line of credit up to $50,000. We're waiving all interest for 90 days, and we're not charging any kind of loan origination fees. And it allows those business customers to still have some kind of safety net to the side since they're choosing not to participate in the programs.
Okay. And a question which you alluded to before was that you're at Fulton at the moment, just looking at your own customers and trying to help them. But do you know if someone, you know, someone, Brenda's actually asked, if your bank's not participating, can you go to another bank that you don't have an account with?
So I would definitely ask them. So if your bank's not ready, you could call around and find out who's willing to accept all applications. I'm more than happy to let Retail Alliance know when Fulton Banks makes that decision to open up their line to accept. We're not turning applications away from non-customers, but we're only reviewing our existing as of right now. But at the same token, I do not want anyone to put their application in our queue just to be sitting. So it would be very important that they do make a phone call. I'm not sure if, I know that Old Point, I had heard from colleagues that Old Point is probably about where we're at as far as movement on a workflow. I had heard from a individual that contacted me yesterday that Navy Federal said that they were not ready and that they were doing something mid-April. As far as, what is their name? Not Monarch, Town, sorry. As far as Town Bank, I knew a couple business clients who reached out to me because they could not get in touch with their business banker at Town. So I'm not sure where Town is at in the workflow. So again, the ability to put together this workflow is tremendous for all of us. And again, like I said, we probably changed things, I don't know how many times at Fulton to try to make this work. And we've actually gone so far as we have taken individuals out of their jobs and they have placed them in that queue for the ability to process these applications. So there are branch managers who've come out of their job in order to assist with the workflow. So we have a lot of individuals that we've had to kind of come together and work together as a team, as an organization, to help to accommodate and make this work.
Right. Well, we appreciate that. Thank you, Tara. There was a question, a couple more actually in the queue. Tara, I'm not sure if you can see, but Misty, are you able to see the questions?
Yes. Yeah, and I have been replying to some of them, but I did want to go ahead and address Tracy Burlage's question. Her question is, Misty, could you please explain that again? Can't do the PPP and one of the payroll tax credits. Now, there is a payroll tax credit that is out for businesses who suffer a 50% or more loss of revenue due to the COVID-19 crisis. And what's going to happen is they are going to get what's called an employee retention credit that covers up to $10,000 of their payroll if they qualify. So those who actually qualify for this credit are going to need to decide if that credit is in their best interest or the PPP, because you can't have both. It's one or the other on that one. So I hope that clarifies it a little bit more.
Did that answer Karen's as well?
Okay.
Holly, I also wanted to add too, I've had some of my clients who've made decisions to separate the funds, which might be a very good idea to do. And that is, and when the funds are received, from either of the plans. I've had customers who are opening up additional accounts to place those funds in those additional accounts from a documentation standpoint, so that they truly are funneling those funds into the proper place. They have bank statements to show any kind of ACH or automatic debits that they may have coming out to their payroll companies. They're able to track checks, any kind of wires, anything that they're doing with regards to the program, especially for the PPP, so that they can ensure that they are putting themselves in the best position to be able to gain forgiveness. And like Misty said, yes, you can apply for both programs, the EDL and the PPP, but before anyone jumps out there and takes the advance, they need to really understand how that's going to affect their repayment on the PPP. And if they are capable of holding it down and holding the business together and not accepting the advance, but just waiting around for them to be approved for both programs, so then at that point they can decide, I really believe that should be, I think that's probably better in their, better for them to do that, better position for them to be in. And also the EDL is a 10-year term, so these programs are allowing business customers who did not normally are able to be approved for a loan, have the opportunity to actually get approved for a loan to take care of things they need to take care of. A part of the underwriting process for us is reviewing the application, reviewing the documentation supports the amount that the individual is requesting, certifying that the business is who they are, that it's not fraudulent of any sort, but nothing in there with regards to pulling personal credit, pulling business credit. Do they qualify under those means? I have a lot of customers very concerned that they may have some credit issues. That is not what they're doing. So this actually opens the door for those individuals to be able to do that. So it is a lot of thought process they need to put through and conversations that they need to have with their accountant, because for real, this is actually an opportunity for business clients to kind of pull themselves out a little bit, especially with the EDL, and be able to take care of some things and really position themselves and be able to have time to pay that loan back on a 10-year term.
I would like to add to that a little bit too, that what people also need to understand about these loans is that these loans are intended to maintain your business as it is now. It's not intended for you to grow your business. So I just wanted to put that in there too. So I know somebody called me and they said, hey, I'm going to pay off my lines of credits. I'm going to hire more people, but that's not really what these loans are intended for at this moment. So just be careful for that.
Okay. Did you answer the one from Karen about her employees filing for unemployment?
Yeah, I did. So, I mean, if they're already on an unemployment, you might want to look into an EIDL in order to cover any operating expenses. But since they're already on unemployment, and it might be in their best interest that they're that way. That kind of eliminates the idea of the PPP out. That it's still kind of a gray area on that point. Do I just suddenly bring my employees back? I think that's still to be determined. I still need to figure that one out.
There's another question. Is the EIDL grant also for an 8-week period?
No, that is from January 30th of 2020 through December 31st of 2020. So a much wider time frame of expenses for you to cover. So that's one of the reasons I'm kind of liking it, simply because you're not pigeonholed into that 8 to 10 weeks.
Okay. And Brenda's just got a comment, most make more money being on unemployment.
Right. And once they're on there, it's like,
All right. Has anyone else got any more questions for Tara or Misty? Or Ray's just come back online. Ray, did you have anything?
I just want to thank both Misty and Tara. Excellent presentation. Really appreciate your support. Our businesses, I mean, they're suffering and they need as much help as possible.
Right. Well, it looks like Tracy's got one last, we can slip that in, could we? What portion of EIDL is forgivable?
none of it is. None of it is, unless you refinance it into a PPP. So you might be able to do that. And then of course the EIDL does have the grant, but none of the EIDL is forgivable.
Okay. If you don't mind, Misty, I think you were going to share your email address in the chat.
I did, and I'll go ahead, I'll do it again so that everybody has it. It's misty@pixel, P-I-X-E-L, F as in Foxtrot, G as in golf.com.
And for anyone on the call, please reach out to any one of the Retail Alliance staff, the directors, with any further questions, and we will try to get them answered after the call as well. But we appreciate you very much, Misty and Tara, for coming online. And I know this is a busy day for both of you and has been for the last couple of weeks. So we appreciate it.
So we appreciate the ability to get the information out. So thank you so much.
You are
Yes,
welcome.
most definitely. Thank you.
All right. So Ray, I think we're ready to wrap up. We will have another briefing next Friday morning.
Correct.
April 10. Is there anything else you wanted to share?
Nope. Nope. I think that's good. You've hit the events. I think we just, our members and customers need to check out our websites, make sure that you know, they understand what our scheduling is and what we're up to. So just
Wonderful.
good luck, and we'll see you again next week.